Fino just crossed the single most dangerous and powerful line in Indian finance. It is no longer just a payments bank. It is now officially moving towards becoming a full-scale small finance bank. So this one approval can either create massive shareholder wealth or destroy weak investors brutally. So the real question is Fino turning into a multi-bagger or is this a trap after a hype? So what just happened? Fino Payments Bank has received approval to transition into a small finance bank. That means it can take large deposit, it can give full-scale loans, it can expand branch banking, it can enter serious credit markets. That is not a minor upgrade. This is a complete business model transformation. So why this license is a big deal? A payments bank cannot lend freely, cannot earn strong interest income, operates on very thin margins. Whereas a small finance bank earns loan interest, builds strong CASA base, controls credit cycle, scales like a real bank. The single change can multiply revenue, profitability, valuation multiple. But this is also where most investors die if they misunderstand the risk. So, what can be the immediate stock market impact? On a short term basis, there might be a speculation rally, volume surge, retail frenzy, and media headlines. On a medium term basis, there can be a valuation rewriting battle beginning, and market will wait for lending growth, asset quality, capital adequacy. On a long term basis, only execution will decide if wealth is created or destroyed. So, license will not make you money, loan book will do. The biggest hidden risk. Let's talk about it. Now, this is where most people get trapped. Credit risk explosion, poor underwriting, high NPS, capital dilution, aggressive retail lending mistakes. Now, many small finance banks in history grew fast, then destroyed shareholders' wealth for years. So, license does not mean success, execution means survival. Now, what smart investors can track? If you are serious, you can track these five things: loan book growth, gross and net NPA, CASA ratio, capital adequacy, cost to income ratio. And you can ignore social media hype, telegram pumps, one day price spike. So, who can invest and who can avoid? It is suitable for high risk investors, long term monitoring investors, people who understand the banking cycle. And you can avoid if you're chasing listing style rallies, you panic on drawdowns, you don't need quarterly results. This is not a buy and forget stock. This is a track or die stock. So, what is the final verdict? Pino's small finance bank approval is a massive opportunity and a massive execution risk as well. So, whether this becomes a multi bagger or a value trap will depend on only one thing: asset quality discipline. So, if you want clean bank stock analysis, no hype, no pump, no telegram nonsense, subscribe to Insider Monk. Here we don't chase rallies, we survive banking cycles and compound through them. Thank you.